Hey everybody, it's Hussein Kabani, your favorite broker, and we are going to talk about something very exciting again, and that is interest rates. Finally, we see a break in interest rates, and just when we thought that they might just be kidding with us, after lowering it in June, they lowered it again in July, which now came with commentary that further validates what people are thinking, that the rates are going to continue to come down. I mean, things can change between now and then, but it seems like we're on a path of lowering interest rates at this point right now. I mean, all of the major lenders at this point have come out and made predictions on how low they think that the rates are going to go. But two lenders stick out the most to me at this point right now, which is TD and CIBC. They've been the most aggressive with forecasting lower rates at this point, which they are saying is that there is room to come down 175 basis points between now and the end of 2025. So the next 18 months-ish, they're saying that we could probably see a rate decrease of 1.75% further to what we've already seen at the half, which would bring the prime lending rate to 2.75% from the Bank of Canada. Now, there are a bunch of different things that happens when interest rates go down. Of course, for people that are holding variable rate mortgages, it's definitely a positive thing. People with Scotiabank mortgages are going to see that direct impact happen right away on the payments that they are paying. But otherwise, if you're on a variable rate with another lender, what you will see is that your principal amount will increase and your interest amount will decrease, but your actual payment will not change. But at least it's money in your pocket versus the bank's pocket at that point as this rate comes down. I think the other thing that we're going to see is that I think more people are going to start to lean towards more of a variable rate mortgage. And I think that is a safe bet. I mean, do your own due diligence. I've been wrong before, obviously, but including on my own mortgage product decisions. But right now I'm renewing a mortgage on my principal residence. I decided to go with a 3-year variable rate. I was getting a lower fixed rate for 3 years, but it just didn't make sense because if the bank drops another 0.5%, I'm going to be stuck with the fixed rate. That doesn't make sense. And remember, the other thing also with the fixed rate is that your penalty to break in case you have to could possibly be a lot higher than being on a variable rate. So I think people are going to look at more of a variable rate product. Now, whenever we have the interest rate come down, it's not always a good thing. Like I said, it's great for homeowners that are adjusting their payments and things like that. And especially for people, let me add this, is that even when we saw the lower rate mortgages, most people go on a 3-year or a 5-year. So this year we had a lot of the 3-year mortgages kind of renewed that were at lower rates, right? And if you had like a 1.5 or a 2% rate, you may have been forced to renew at 5.5, maybe 6%, something like that, which is quite a lot. But now, if we're saying that in the next 18 months, it's going to come down another 1.75%, you might be having a 5-year fixed rate that you got at 2 points, which you might only have to renew at 3.5%. Not saying it's going to happen, but obviously that's going to be an easier pill to swallow to go from 2 to 3.5 versus go to 2 to 6%, right? So maybe the people that had the 5-year rate are going to do a little bit better off and not have such a payment shock and might be even able to stay in their house a little bit more comfortably than the people that had the sticker shock of going from 2 to 5 or 2 to 6. As I was also saying, like the interest rate coming down obviously means that our economy is not doing as well either. So even our growth in the country has been cut down. The forecasted growth, I believe, for 2024 was 1.5%, which has been cut down to 1.2%. Would I be surprised if that even gets further cut down as the year goes on? Not going to be surprised at all. We're also hearing news of like higher unemployment rates. Less consumer spending is something that what we wanted to see to bring that inflation number down, but it's stimulating the economy less at the same time, right? So all signs are actually heading that we might be ending up in a recession at the same time. So interest rate is good for us trying to manage our mortgages and possibly making decisions on doing renovations and getting cars and things like that. But it also hurts us because we know that the economy is not performing as well, and what is being done in the background to help us actually stimulate the economy without making inflation go out of control. Overall, what I can say is that it is a good sign with the way that the real estate market is working with the interest rate coming down. I don't think that there's going to be any massive dramatic changes in the market, except that I think that volume will start to pick up with this interest rate coming down. What we've seen is that our volume has been low in terms of sales. People have been sitting on the sideline. We talk to sellers and sellers are like, we're going to wait until interest rate comes down so we have more buyer pool. And the buyers have been saying, hey, we're going to wait until interest rate comes down so the payment becomes more affordable. So those two things alone might just cancel itself out. But what we might see is more volume. In another video, I've also mentioned that there's also a certain time that people are going to wait, right, for the right signals. And I think starting right now, we're seeing the inventory gap from last year to this year start to narrow a little bit. And people have been waiting on the sideline to make a decision whether they can not afford their property anymore because it's $6,000 and they were expecting to pay $3,000 or $3,500. And they're like, hey, this might be a good time for me to get rid of it. Also, at the same time, buyers getting into the market, they might be like, hey, this is a good opportunity because now it's been proven more or less that the rates are going to continue to come down. And usually what happens in the market is that when rates start to come down, the activity picks up and it could lead to prices actually going up. Saying that with the caveat, we still do have an inventory position that is at an all-time high, just north of 25,000 listings available for sale throughout the Toronto Real Estate Board. So I don't think that we're going to see a dramatic increase in price with the interest rates coming down. I just think that we're going to pick up more volume. And if we happen to see some healthy appreciation for the next, few years, that's somewhere between 2.5%, 3% to 4.5%, 5%, something in that range, I think I'll be happy. But even as a buyer waiting to come into the market, if you look at that happening for the next 3 to 5 years, just think about what the compound effect of that's going to be. So fine, if it only goes up 3 or 4% and it's only like $20,000 difference right now in 1 year, well, just let's compound that. If you're thinking you're going to wait 3 years or 5 years, are you going to end up paying $60,000, $80,000, $100,000 more for that same property? I'm not sure, but could that be a likelier situation versus that property that you're going to buy now and it's going to go up $100,000 next year? Like, I don't see that happening. Can we see, like I say, the gradual increase? I think so. Even with the numbers tightening up, and we're seeing across the Toronto Real Estate Board that we're actually doing better than we did in the previous July of 2023 in terms of sales. I think these are all indications that, hey, the interest rate is helping. We're going to start to see some volumes. Can we expect that to long-term compounded growth in the real estate market? I think so. Guys, if you have any questions about this, there's no clear black and white picture on this. It's a very gray area and everyone's situation is a little bit different. So if you guys want to discuss what's going on with your situation and you want to get my 2 cents on it, my Calendly link is going to be below. I encourage you guys to click on it. There's no obligation. I won't follow up with you after we have a conversation unless you want me to, but let's have a conversation. Maybe I can point out some things based on your situation. I'm sure you guys like this video. That's why you're watching it still, right? So like it, share it with your friends, someone that you might think that might get some value out of this at the same time, and subscribe because we have the best content out there and it's just getting better and better every time we record. So subscribe so you don't miss any more of my goodies. Until next time, guys, remember one thing: get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.